Does this take the heat off of Jay Powell from President Trump?
Well, it was a very nice press conference, and it clearly had a calming effect. Markets found his words very reassuring. Chairman Powell comes across as a very earnest man. He wants to do the right thing for the economy. I think he put it in those words. He acknowledged that so many things are going well, and company earnings are coming in positively. We see wages going up, but no worries about inflation. So I think that he conveyed the idea that he doesn't want to mess things up by accidentally having a Fed policy that disrupts, that has an inordinate effect on financial markets. And in that sense, I think that everyone probably agreed that that was the right sentiment to put forward.
Jim, do you agree?
I mean, I think that patience and common sense are estimable virtues. It's fine. We ought to have them. I think that not so far underneath the surface of things, there are big problems with the way we do business in central banking. For example, I mean, here, the Fed on a mark-to-market basis is or was, as of September 30th, insolvent. It is leveraged 100 to 1. It was showing $66 billion in unrealized losses, mostly on its mortgage portfolio. Now, it is never going to be mark-to-market, and the Treasury has guaranteed its losses. But this is a sign of the disorder in the structure of our finances. Other such signs would be a $1 trillion budget deficit in a year of blooming prosperity, the persistent deficit in our international investment position. So, you know, I agree with Judy that it was soothing. It was lovely. I mean, more money is more better for markets, right? But I think that this is really not, it's not reality. It's not reality.
But, I mean, what is Fed Chair Powell supposed to do about that?
Well, I think
the politicians are responsible for the deficit.
I think that Fed Chair Powell is given a very difficult hand. I think he's playing it reasonably and playing it well. But, you know, he is, to a great extent, I think, the prisoner of the institutions and of the history that he has inherited. And among these inheritance are a $4 trillion balance sheet, under which the Fed has like $39 billion of capital. So it's, as I say, it's leveraged 100 to 1. And that's a symptom. It is a symptom of the overstretched state of our debts and of the dollar as an institution.
Judy, clearly the international picture has worsened, and that's another factor that no doubt was considered. Do you think that suggests that the dollar move today might be temporary, and that despite a dovish tone today, we might start to see a stronger dollar again as the year plays out?
Well, it's hard to predict. There's always reasons when it goes up to explain afterwards why it did, but likewise when it goes down. I was struck today by the humility that Chairman Powell brought to his analysis. He kept saying, we don't really know. It's all going to be data-driven, and we have to keep researching and to be able to clarify our thinking about all of this information that comes into the decision process. I think we have come around to believing somehow that the Fed chairman has to be omniscient. And I have great respect for people who are in the arena, who really have these real-time responsibilities, and when markets start to crash, I'm sure a certain amount of panic sets in. But I've had the luxury of observing from the point of view of someone who wonders about the role of central banks and whether they haven't become too dominant and too big a factor in the performance of financial markets.
So, Jim, I mean, what are the near-term investment implications of all of this if the Fed really is taking a pause here, which we don't know how long it'll last?
Well, I guess the near-term investment implications would be for a more steeply sloped yield curve, a little bit more inflation protection at the long end in the shape of higher yields. I guess it's good for the stock market. I guess it's good for the gold market. But Judy said something about the omnipresence of the Fed in our financial affairs. We're reminded of the referees in the NFL who were mortified to find that they were the story after this game in New Orleans. Or at least it was with New Orleans. And so the Fed, I mean, the referees of the Fed are constantly the story. And I think that perhaps in a better tempered financial world, the Fed would be rather more in the background. But I couldn't agree more.
How do you break that dependence?
Why, Sarah? We get rid of it. Well, I think there are alternative monetary systems that we ought to be thinking about, and the fiat currencies. Sarah, do I see you shaking your head?
No, this requires a much longer conversation about hard money and
well, Judy Shelton has written extensively on it. Yeah.